Separating signal from noise inside the news is rather difficult, especially if you're just looking at the typical news view of information inside financial markets. Using the S&P 500, gold and Bitcoin, I'm going to take you through how you can look through the charts to determine what's happening next. I'll also show you how you can stack probabilities between charts. Getting an edge inside financial markets is wildly important. I'll also do a quick follow-up on the Pepe trade from the last 24 hours. And there's a partial scholarship up for grabs for profiting from CTKS method structure. Let's run the numbers. Welcome back, CTKS Method students and elite service members. A big thank you to everybody for your comments in yesterday's video. We have such an amazing global family. When most people are fleeing the market, you are still here. You are awesome. As a community, we always seek to go deeper. For example, Bitcoin price rally stalls as gold nears record 3.1k high. Now, we can look at the news headlines, or we can look at the charts, or we can look at both. The news can give you really good things to look at, but you should always go to the source. The ultimate source of any specific thing that you're trading or investing in is the price chart. Why is it the ultimate source? Because so many things will move around price. The charts are literally the footprints of the people with the most money. They're pushing it up and pushing it down, but they are subject to rules. That rule is structure. Let's just pop on the structural indicator from the service and let's have a look at what gold is actually doing right now. We've seen, because of geopolitical tension, and there's a lot of stress out there on tariffs, especially note April the 3rd, that's an important date. Expect the markets to get wobbly. Now, the markets getting under stress is a good thing, because when they come down, if you believe in what you're doing, that's getting things on sale. Now, what do we see in gold's price at the current time? Gold is currently trading at 30.56. It's come up to one level of overhead structural resistance at 30.53. Notice it hit here before. Now it's starting to make its way through. There's a secondary level up at 30.60. It's seeking to get above that. Now, why did gold move up so quickly? Because it had a lot of underpinning structural support, and this is back from the 14th. So we're looking at quite a period of time here. This is a positive CTKS gap, and this overhead structural resistance is exactly what caused gold to flatten out. And gold investors inside the service already knew these structural levels way ahead of time. We literally have X-ray vision. We know where the structural levels of resistance are and the structural levels of support are. Also, more importantly, their location and their strength and the gaps between them. Because if you get gaps to the upside, that's fantastic. That means the price can rally. But gaps to the downside means the price can fall. And if we think about MicroStrategy recently, MicroStrategy had a 25% gap that was filled over and over and over again, to the upside and to the downside recently. Unfortunately, the majority of traders and especially investors look at charts on mainstream media news like this and make their buying and selling decisions. Pretty much goes like this: if it's going up, I'm going to buy. If it's going down, I'm going to sell. Instead, we need to understand and know where the structure is. But there's a little bit more to all of this than just looking at your money chart. Of course, we've been looking at gold, but you could be looking at Bitcoin, you could be looking at literally anything. It doesn't matter. The process is the same. First of all, understanding intercorrelation and interconnection is wildly important. You got it, it's wild. Now, when we look at the S&P 500, what are we seeing here? The S&P 500, because of the tariffs, has been coming down and down and down. It recently kicked up a little, but are we expecting upside or downside price action? That, of course, just like gold, depends on the structure. But there, of course, is a little bit more to this than meets the eye. Let's overlay gold's price action across the S&P 500. Cool, that is better, and you can see that gold has been coming up, the tariffs hit, that brought down gold, and gold has been going for it again. Now let's put on digital gold, Bitcoin. Now we can see that Bitcoin follows the directional correlation of the main markets, but because it's so risk sensitive, it was selling down before the main markets were selling down. This is a critically important thing to understand. You must know when you've got topping action or retracement action right across the cheat sheet. The cheat sheet literally is your key to unlocking price action secrets. It's available completely free of charge from CTKSmethod.org. You'll notice that gold is a row 2 signal. What we do inside the cheat sheet is we need to understand momentum, directional correlation, interdependence, and especially structure. As you saw on gold structure, it came into structural overhead resistance and was rejected by it. But we know these things ahead of time. Now, what have we noticed in the past 24 hours? The VIX has been coming down, it found a great degree of structural support and it bounced. What did that do to the S&P 500 and the major market indices? It retraced them. If these are retracing, we know the overlay with Bitcoin, and of course where Bitcoin goes, the entire crypto market goes with it. What happened then as the retracement in the S&P 500, Nasdaq, Dow, and Russell occurred? Crypto sold off. Again, looking at the critical structural levels is what you'll need to do. And we're going to go through that in this video. But the concept is, you know, gold is at overhead structural resistance levels. So we need to look higher and we need to figure out if it doesn't hold that where it's going. Now, if it actually comes down, this is part of your trading strategy. Even if you're not looking at gold, if you're trading Doge or Solana or ADA or Tesla or Microsoft, Nvidia, MicroStrategy, which is now Bitcoin strategy or strategy, the key is this actually matters because gold is picking up geopolitical instability. That instability, if it starts to fall, if gold starts to fall, we'll see the VIX start to come down, junk bonds start to go up. And what will that mean? The S&P 500, the Nasdaq, the Dow, and the Russell will go up. What does that happen? Well, what will happen to row 4? Apple, Tesla, Microsoft, Nvidia strategy will go up. If these are going up, what's going to happen to the crypto market? Of course, it's highly risk sensitive, so it's going to go up. You can see how wildly important it is to keep your eye on row 1 and row 2. What actually happened in the past 24 hours was the VIX came down to structural, it was coming down like this, found structural support, which has been doing so for the past couple of days, and bounced and cut over. If you've done the profit in course, you know that this means caution. Again, everything is structurally dependent, so we're going to have to keep our eyes on the key structural levels of these 3 charts, the S&P 500, Bitcoin, and gold. So we'll do that in this video. Just returning to the S&P 500, you can see this directional correlation. Bitcoin feels it first. A lot of people inside the stock market say, oh, crypto, that's just rubbish, it's rat poison squared. They take the Warren Buffett view. But Warren Buffett's companies are actually investing in crypto. So saith the news, but really what you want to look at, even if you despise crypto, and some people do, I don't know what's wrong with you, but this is a signal. You want signals. If you want to see where the stock market is weakening, keep your eye on Bitcoin first, because that's going to tell you if this is weakening, if you're getting divergences, it means the stock market is not far behind. Bitcoin is a leading indicator of the stock market. Gold and digital gold have got so many people talking about things, but you can see that Bitcoin is a risk on or risk off signal indicator. It's going to basically align with the major market indices. Gold serves a completely different purpose. It is a risk off asset class. If geopolitical tension and stress is hitting the market, guess what? Gold is going to do a banger move. If geopolitical stress is hitting the stock market, guess what? Bitcoin has been selling down already. If you're new to our community, this is called intercorrelation and interconnection. It's vitally important. In fact, if you don't do it, you're leaving not only money on the table, but you'll be probably suffering horrendous losses and just looking to the mainstream media headlines and say, I don't understand. Why didn't they tell us that this was going to happen? Well, their audience is not you. Ken, how could you say that? What do you know? I guess hanging out in financial markets for nearly 4 decades will do something like that to you. There's a fundamental difference between traders and investors, and that primarily comes down to mindset. Traders are all about timing the market, investors all about time in the market. Or so the theory goes. Actually, it's a lot different than that in terms of practice and what I've observed over decades and decades. When the markets are coming down, no investor is buying the dip from a long-term perspective unless they're veterans or unless they have the calling to be great in the market. Every investor wants to buy low, especially at the bottom, but you'll find then just simply not there. If the price comes down and down and down, they'll get despondent, they will capitulate. This is something that you need to fight. Everybody goes through it. You're not alone if you've been doing it. This is why trading is so wildly important. When we trade, we must look for and at structure inside the charts. Well, when we're investors, we need to do the same thing as well. But if you're a trader, you look on it pretty much on a daily basis. So what do we see in the S&P 500? In the past trading session, we sold down and found structural support at the 56.72 mark, piped ourselves up, did a nice little retracement. Everything was going fantastic until we cut under, and then we found all of this structural support, which we knew in advance was there, and it's held there at the current time. Now, if it fails, we're looking at 56.72, and if it passes, whoa, this could do really well. But Ken, what about tariffs? I'm reading in the news that everything is absolutely rubbish. That's why I call it the mainstream media news, because it's always screaming, disaster, fantastic, go, buy the dip, or buy the peak. You know, we've seen it on oil so many times. When it was trading north of 140, everybody in the mainstream media's news, mainstream, was screaming loudly about US oil, and then what did it do? It just dumped. If you know what I'm talking about, please just drop a comment to that effect. So just don't automatically assume that it's coming down. What smart money likes to do is to just wrong foot every single player inside the market. It loves to move in opposite directions. Now, how do you know if it's moving opposite? Just keep your eye on the structure. If it's doing a structural failure, it's opening up lower levels. But if it's doing structural passes, it's opening up higher levels. And you'll need to stack probabilities as well. So that's the S&P 500. We know the key line in the sand, but what if it loses that? What's the next levels below? Well, they're 56.13 and 56.04. We know in advance where things can go to. The directional momentum of the S&P 500 can be dictated or determined by the futures of the S&P 500, the Dow, the Russell, and the Nasdaq. If we see the lower capitalization indices falling, such as the Russell, we would assume, quite rightly, that the S&P 500 and the Nasdaq will head in the same direction as the Russell. Also, be aware that the Dow is the second least capitalized, so third and fourth. So what we're actually doing is we're seeking to stack probabilities to understand where something can go. Also, keep your eyes on what retail will be looking at. Retail will be saying this thing is about to just plummet off a cliff. Maybe, maybe not. You must do your three-dimensional risk management. Are you prepared for a fall? Are you prepared for a consolidation? And as we get closer and closer to the weekend, guess what's going to happen? Bitcoin and crypto will, in all probability, consolidate. And with the tariffs coming in, we could expect some degree of negative consolidation. Yes, consolidation with a negative twist. But what happens if they do the unthinkable and go up? Well, you know, the crypto leads the stock market. How could it go up with all the tariffs and everything coming? Everything is going to hell. Exactly what they want you to think. So, of course, prepare for the upside. Now, the institutions know that people are like light switches. They can only handle one direction. And if you're light switching away, you've got a bit of a problem because you're not figuring out that there's two other ways the price can go. If you're absolutely unequivocally certain that it's going to go down, what happens if it goes flat? Or if you say, no, it must go down, so I'm going to short everything I have. I'm going to put the house on it. And then it goes up. What are you going to do? One-way decision making is always emotional. It is not structural. If you know where the structure is, you just say, is this passing? Is this failing? Therefore, the key to us is, what is Bitcoin currently doing? We can see it's a little bit weak and it's got a downward flavor. We're not surprised about this. The tariffs are just causing a lot of problems inside global markets. Inflationary expectations, the Fed's saying, yeah, the rates are pretty good where they are. No rate cuts for you. So we're still seeing the crypto is supported. Before, I was showing you how Bitcoin was coming down even as the S&P 500 came up, and then it followed Bitcoin down. Bitcoin leads the main markets. Now, it's exactly the same to the upside. If Bitcoin starts to find structural support and starts to go up, everybody will say, what the? They'll say, hang on a second. Tariffs, this is supposed to come down. And then, of course, all the news headlines will start to say, oh, it was already priced in. We knew that ahead of time. Actually, just dispense with the headlines. All you need to know from the mainstream media news is they reflect current price action. If the price is coming up, that'd be pretty dumb to say, everything is falling. And if everything is falling, that'd be pretty dumb to say everything is rallying. You would say, that's not the news doesn't know what it's talking about. And of course you can see the problem, because price is always moving in a wave. If it's not price, because that's what price does. So therefore, we need to look structurally. Therefore, looking at Bitcoin over the past couple of days, we can see it's under negative momentum. Now, this is a little bit of a good sign, because at least we're not making lower highs all the way down. We're starting to see a sign of life. But hang on a sec, the tariffs, April the 3rd, this is not possible, everybody will say, because they've been reading the news. Read the news, look at structure. Remember, signal and noise are very different from each other. We can see at the time of this recording, Bitcoin was 87,293. Now we need to look at the structure. If you're not looking at structure, you don't have X-ray vision, you're just guessing. Now, what did we see here? When we lost the 87,930, we created structural dependency down to the 86,830 and 86,665 levels. We can see it was all weak and we got our structural support at 86,120. Then things rallied up, retested the 86,665 and couldn't make it through the 87,930 mark. You absolutely understand where things are going. You could of course look at any other price chart without structure and you would just be guessing. You need your X-ray vision. If you don't have it, you're in trouble because you're just guessing, and don't guess when it comes to money. It's too expensive. Now, what have we seen here? Again, the buyers are trying to get above 87,930. That is your key structural level to keep your eye on. Now, what if the bears gain control of the market? Well, they'll seek to push it below that 86,665 level and down to the 85,728. But there is still structure inside the market. Well, what about the other side of the coin? If the bulls get their way and start to rally price up, well, you can see that this is looking fairly good. If we get above 87,930, confirm it as structural support, the next positive air gap takes us to 89,610. This would absolutely decimate all the shorts inside the market. If you're using leverage, please be careful in crypto. Crypto is a nutcase. Now, what happens if Bitcoin gets above that 87,930? That's very positive for the major market indices. We would expect them to join Bitcoin. Bitcoin is a very, very good sniffer of risk. It is a risk sniffer. Now, what happens if we see Bitcoin selling down to around this level? We know that there's a lot of structural support. It's been hit, it's been tested, it is there. And we know it ahead of time. Other people can only figure out it's there after the candle prints. But we have something special. We have X-ray vision. We know it's there before other people do. The key to bear in mind, you must keep your eyes on the cheat sheet. The VIX is bottoming, so that creates a sense of caution inside the major market indices. But Bitcoin will sniff things out. Now, if you want to get the free cheat sheet, just come up here to CTKSmethod.org and just scroll down. You'll come to this particular area, your cheat sheet to mastering price action. That's where you want to pick it up absolutely free. The cheat sheet is outstanding stuff. It's just going to give you so much benefit. Now, there's a lot of helpful videos in here, and the official ticker list is just a ripper because you'll understand how the cheat sheet actually works. I've been talking a little bit about Pepe just recently. The video yesterday and the video from a couple of days ago. In yesterday's video, I gave a bit of a thought process how I was doing these Pepe trades. And remember, the market yesterday wasn't actually, or the day before yesterday, wasn't the best. It actually came up and then retraced. So all of these particular trades were made under fairly negative conditions, but it still netted around 3,600 Aussie dollars. The day before that, I turned about 11,000 Aussie. This is only from one chart, only from Pepe. So therefore, from those couple of days of trading, it was about nearly 14,500 profit in Australian dollars. And yesterday was a bit of a basket case. It was all over the place. And I managed to make about $1,300. So what you will see is that when I closed out these positions, I was happy to close them out just at a marginal profit. And we saw that the market did come down rather sharply, so that was a pretty good move. But throughout the day, I was just turning very small percentages, 1.18, 1.3, 1.4, 1.3%, 1.5%. But these things add up. That actually added up to 1,300 Australian dollars. And if we add that to the other balance, it's over 15,500 profit, like just 3 days work. And all of those trades are made at spot, which actually means that you're buying in the promise of selling at a higher level. But because I know where the structure is across the Pepe, Bitcoin, total, all of the charts inside the cheat sheet, that gives me the X-ray vision inside the market to lean in and lean out of positions. So even though the market retraced, it didn't make any difference. We're still making profit. If you would like to learn my secrets of how I do that, it's in the Profiting from CTKS Method structure course, and I'm going to be offering one partial scholarship into this profiting course. You'll learn how to make money in any market condition, going long at spot, which is a key skill for you to have. If you can't do this skill, you're going to be in trouble. You can always do leveraging later. Also, understanding where the tops and bottoms are on specific charts is incredibly important. Predicting the tops and bottoms of every cheat sheet task is inside this particular course. Then you'll look over my shoulder where I literally take you through real-time trades, and you'll see where I went in, when I went out, what I was thinking, and you'll learn so many things. Fighting retail trade perfection is incredibly important. In week 4, I put it all together. This is about how to keep the profits that you make, and also how to break out of any negative thinking in terms of retail trade perfection. Retail trade perfection is a really insidious, evil thing. It's all about you thinking that in order to invest or trade, you must make 1,000x every single time you enter or exit a position. That's like being in golf and just every time you hit the ball, it's a hole in one. Wow, what a huge amount of pressure to put yourself under. Or it's like playing baseball and thinking that you can hit a home run every single time. Or in boxing, you're going to score a knockout punch with every punch. Hey, this stuff doesn't happen. As you're watching free YouTube video content, it's basically from a lot of people who don't know primarily how to trade. It actually matters how much time you spend inside something, and you know this already. In what you do, if you don't put in the work, you don't get out the result. And a lot of people say, the best way to learn something is to teach someone else. Not inside financial markets, you're going to get people destroyed. To be eligible for the partial scholarship, all you need to do is pop across to LinkedIn and directly message me.